Good afternoon. We haven't done a video in a while. We've been kind of busy working on the Crown Capital portfolio, bringing some companies into the fold, and then restructuring the management teams a bit. So we're kind of back to videos now. We thought we'd talk about the markets relative to presidential election years. So a couple of data points. The S&P actually predicts markets. So the 3 months prior to the election are a great indication of what will happen in the election. In 12 out of 14 elections, when the market was up, the incumbent won. In 7 of 8 elections, when the market was down, the incumbent lost. So it's pretty interesting. The market will dictate the election in the fall. In particular, remember George Bush Sr. and that faltering economy as he went into the election. Election year growth. Turns out that in only 4 out of 23 elections has the economy contracted, or the market in particular seen a reduction in value in an election year. Election years tend to be good for growth. A lot of activity, a lot of thought, stay in the market, right? Party indifference. In 17 out of 18 years, an investment in an election year, regardless of party, would have made you money. In 14 of those 18 years, it would have actually doubled over a 10-year period. So election years tend to actually not have a significant difference. The party has not a significant difference. That might be different this year. We have some pretty extreme views. The Democratic Socialists may have a higher degree of impact because it's such an extreme, novel kind of economic approach. But as long as capitalism holds, people make money. Political uncertainty. We would think that all this uncertainty leads to kind of increased investment in gold, reduction in the markets, and then gold has gone up. It's set new records again recently. So you'd think that this uncertainty actually leads to market contractions, but as it turns out, it just leads to moderation. So what happens in these times of political uncertainty is there's still growth, still at the same rate over time, just less volatility in between. So it tends to be moderated, a lot less down and a lot less severe up, but over a longer measurement period, the same amount of growth. So I hope that's some interesting information regarding the election this fall. As you can see from the debates, the election season is well underway. So we'll look forward to seeing who the Democratic nominee is and what the outcome is in the fall.